The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Now, the author of The Path of Least Resistance and the Tech Insider, David White.
And welcome all to a beautiful June 25th. We've got a market trying to have a little bounce out of here. Not uncommon. This is the second day of options rollover. Normally what you will see is about this time, the market decides that option rollover is over, and we start seeing the true direction of the market. Of course, we're getting close to the end of the month, so there will be at least some level of trying to hold this market up through fund buying. The question is whether or not we're going to see any redemptions. If we are, then normally the market, they know already, and they're going to go ahead and no reason to hold the market up if you know that there's going to be a lot of sellers coming into it. You'll go ahead and sell it out before that happens. And, of course, most of these street names have funds in them, and they will always do whatever in the best interest of the company and not particularly in your money in an ETF or fund. So this is a very telling time that we've got a move this late in the month, so close to what we are going to see is window dressing or funds. And it really looks like probably they ran this thing up and tried to keep it up as long as possible into quad witching. And a lot of funds out there are going to be paying their at least a quarterly results and profits. And what can you say? The quarterly, not dividends. I'll think of it in a minute. Anyway, on this day in June 25th, in 1876, Native American forces led by Chief Crazy Horse and Sitting Bull defeat the U.S. Army troops of Lieutenant Colonel George Armstrong Custer in a bloody battle near the southern Montana's Little Bighorn River. Of course, he was probably an okay guy. I have a feeling, though, from what they wrote about him, he wasn't the sharpest knife in the drawer. More, what can you say, intestinal fortitude than probably brains. And he was, I guess, warned numerous times about the problems he was facing. But one of these guys that didn't know any better than to run up the middle if he was playing football. He was confident in superior numbers, which he did not have. He was encircled. And why everybody calls it looks like Custer's last stand, because at the end was a pile of his soldiers, all with lots of bow and arrows sticking out of them, including guns that they got from black market gun runners. But kind of sparked the end of a lot of what was going on in the country and Manifest Destiny going to California. But on this day in 1876, really seems, for a lot of things that seem a long time ago, just think that in 30, a little less than 30 years after this, we had cars. The first airplane had taken off from Kitty Hawk. There was no real electricity at that time. Phones got invented. And we're actually in wild use in the larger cities. So kind of the last heyday of the Old West and pre-technology days. But on a nice, calm summer's day out here, kind of always interesting to look back into your past. Other things we have going on, we've been talking about this chart for a while now, probably 6-8 weeks. And if you're not watching on Tiger TV or in the Den, this is a great chart. We're going to get to who put this together. But it got a huge amount of play right after the 2008 debacle in housing. And we've talked a little bit about it yesterday, but I'm thinking that maybe people in the den, or even someone that wants to call in at 877-927-6648 can tell me where they think we are in this chart, because I think the chart's right. The question is just where we're at. And my thought was that we just finished the return to normal, and we're probably about halfway to that little fear mark. And you can see how much farther down we can go before we will return to the mean of this. Certainly can't be any good when we see major players in the marketplaces like China and the BRICS taking absolutely huge hits and believing that that won't echo into U.S. exports here over the next quarter. Of course, only 37% of the S&P 500 in the last earnings cycle actually beat on revenues. That is a pretty good indication that they were pushing product and sales into the last quarter, at least to make EPS. We're seeing more companies like IBM fire more people. In fact, I was talking to a couple on Sunday, and one of them works for Citibank, and they said last week they had a whole bunch of armed guards come in and escort 100 people out the door, like they were all a bunch of criminals packing AK-47s. And she said even though she didn't get fired, she thought, is that where we've come to in a country where everybody gets fired and treated like they're some kind of nut job that's going to shoot up the place, but just unceremoniously canned, treated like criminals and herded like cattle out the door. But I don't know. Somebody talked about being short Citi yesterday. Or was it Citi? I can't remember. Right now I'm just from her description about the way she was treated there, it makes me think that there are a lot more people that are probably going to get fired at Citi in the future. We know that IBM pink slips have been going out. A lot more people are going to be fired over the next 30 days at IBM so that they can make their EPS numbers. And we continue to see the companies trying to get more out of less. Not a bad thing. But my guess is that it means that it's going to be one of these days we're going to have diminishing returns, especially in companies like IBM. IBM's just up $1 today, 194.68. Really looks like it needs to get back to that 180 low that it saw on last earnings. IBM continues to be the number one patent company in the world. The question is whether or not those patents will always be worth something. In the United States, they will be. In the rest of the world, will they just extend the middle finger like Putin did to Obama over the last couple of days? At least in my belief, the rest of the world thinks we are on that downtrend, that when the U.S. speaks, no one really needs to listen because there won't be any consequences. I think this started a little bit when everybody said that there would be major consequences if Syria used weapons of mass destruction. In that case, it was chemical weapons against at least one town, and there was going to be huge repercussions. Well, it's been a few weeks, no repercussions, and I think at least the more evil countries in the world, or at least run by evil people, people like Putin, have smelled either desperation, fear, or a malaise, and are willing to push that forward. Anyway, we are up 14 points on the S&P cash. Volume is coming in probably what should be average on a Tuesday out here, just under 2.4 billion shares. But we'll look at the rest of this, the way that the rest of this is sorting out today. I added a couple more shorts in the short-term newsletter today. I got some decent bounces, and we were looking for what I thought would probably be good entry points for these highly short stocks when they ran the shorts out and went ahead and took a shot at them. Anyway, to get back to this chart, Jean-Paul Rodrigue, I think he's Canadian actually, did come up with that chart. If you actually Google that his name with Wikipedia, you'll find both that chart and it'd be very interesting to see what people think we are. Maybe we're still on that upswing, and it's just the beginning of the huge move up. Somehow I don't think that many people think that anymore. But Jean-Paul Rodrigue, if you need this, you can always email me at path@tfnn.com, and be interesting. I'll be glad to send you a link to that chart. I think every trader should have it because every market or free market normally goes into a bubble after some period of time, and it seems the quicker the markets move and the more they spread across the world. It used to be every 30 years, and now it looks like we've got bubbles coming every 10 to 15 years, and in this case we might even have a small bubble just after 5 years after the last major sell-off in 2008. But very interesting and a great chart, at least I think it is. Shibor, not much happening overnight in China. They did come in and kind of calm the markets at least, and markets are bouncing a little bit on that. But I think we should be watching about 9 or 10 o'clock every night to see whether or not there's any more stresses in China's stock. One of the other things I thought that was probably most interesting to traders, especially those in the den or those that trade professionally and sit behind monitors like I do most of the day, that is we've been there's been some discussion of very high resolution monitors. And the idea that these monitors are going to have any kind of Blu-ray discs or have enough bandwidth out there in the short term to actually compete or be useful, probably not very good. But certainly a 4,000 pixel monitor may be absolutely what the doctor ordered, especially now that costs are falling. Some of the first monitors were talked about in the $4,000 to $8,000 range, but there's some companies now coming out. Seiki or Seikai, S-E-I-K-I, is saying that somewhere around September or October they will be shipping their 39-inch 4,000 dot by, I think it's going to be 4,000 by 2,000, something like that monitor. And nothing going to be better than have 40-inch monitors to go trading with. Especially when the cost they're saying is around $700. So if you're sitting around a huge amount of monitors, I'd love nothing more than to take these glasses off and get these super high resolution monitors coming out here shortly. But we've got that to look forward in the fall out here. I'm already looking for video cards that could support that. They're pretty expensive at the moment. Anyway, we'll be back in a moment. Give me a call, 877-927-6648.
The Art of Timing the Trade Charts has officially launched at TFNN. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind software, The Art of Timing the Trade Charts allows you to scan for Fibonacci formation setups, including Gartleys, butterflies, ABCs, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the market for stocks just beginning to form the trading patterns that many investors spend days, weeks, and even months searching to find. As part of our introductory pricing, we're offering licenses available at only $59 per month. We're so confident that you'll love this new outstanding piece of charting software that we'll even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Lock in your low price today by ordering your copy at TFNN.com.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
So we've got kind of a little bounce going out here right now. What are we at here at 1586? So we're up about 12 points, 2.4 billion shares. Volume's kind of been slow over the last hour. We're kind of coming around to this 1586 level, and I suspect we're probably going to be over with options rollover probably fairly soon, and we'll probably start seeing some market movement that is a lot more deliberate, has a little less to do with options rollover. Of course, we had quad witching on Friday, and still seeing a lot of those positions pushed on and off that distorts the market for a little while. We got pushed down yesterday fairly hard. Of course, that gives a good opportunity to sell shorts or cover shorts, and then we've got to push up a little bit today, and of course gives you an opportunity to put on new shorts or cover or sell longs. There's always a little pushing and shoving around these 2 days, and I don't put as much weight into trading them as a lot of other days in this marketplace. But we can take a look at it. What I was kind of interested in is the movement in a few markets. And a lot of this, I think, is going to be driven by the Fed. Kind of a nice little move out here in some stocks. DH Horton up 1%. We've got KBH Homes up 1.5%, Lennar up 1.8%, Toll Brothers 1.9%, Ryland up 2%. Let's see, Liquid Liquidators up 2%, Hovenian Homes up 3%. We've got Mohawk Carpets up 3.7%. Of course, that's a William Buffett company. He owns so much of that he can kind of drive the price around to whatever he wants. It'd be very interesting what happens to that price when he gets to wanting to sell it. USG makes a lot of drywall board up 3.5%. SPF, which is a company that's more Arizona, Florida, up 4%. And Pulte Homes up just under 4% as we speak now. So probably a fairly decent short covering rally, at least in these housing stocks. Again, probably can find better stocks out there to short in this market, and probably a great day to start figuring out how to separate the wheat from the chaff. We've got 7 speeches on the agenda this week from the Fed. We talked about this yesterday. Fisher already came out, said he was fairly happy with what was going on out there. And we're probably going to see a lot more on Wednesday with Cockrell Licata. I don't know, maybe that's how you spell it or say it. Powell and Larkhart on Thursday, Lacker, Williams, and Panado on Friday. So just be very aware that we're probably going to be moving at least somewhat when these guys come out with their speeches and what they're looking for in the future. China actually strikes back. China's state-run media is calling on the company's wireless carriers to move away from Cisco products. According to the reports, using Cisco products allows U.S. to attack China almost at will and forms a terrible security threat. This is kind of a tit for tat for us going after Huawei. What was that, 2 months ago, 3 months ago? Something like that. They were actually making their routers send back data each night. Do I think that there's backdoors in all the Cisco routers? Absolutely. Whether or not the NSA placed spies in Cisco to place those in back, or Cisco agreed to them, do I think, especially if you look at the slimy way that John Chambers answered the question whether or not he was helping out the NSA, especially when he was challenged by it. Yeah, I could spot a liar. Now, is he forced to lie on this deal? Probably. So maybe we can give him a little bit, but I've never liked the guy very much. He's always made Cisco his own fiefdom for probably the last 10, 12 years, has been more interested in what Cisco could do for him than what he could do for Cisco and the shareholders. Anyway, China's using this to push out Cisco routers, and for all practical purposes, the Huawei routers are clones and rip-offs of the Cisco products. So I think that they're at this moment trying to at least push internally products made in China out here. We've got a little bit more news. We're going to start getting into some more charts in the last half of the show. You can give me a call at 877-927-6648. That's 877-927-6648.
With the stock market flirting with all-time highs and volatility back, now is the perfect time for a 2-week free trial to Market Insights. On Monday, June 24th, Tom O'Brien closed out all 5 open positions in his daily newsletter, Market Insights, with all trades being profitable and ranging from a 2.23% gain all the way to more than an 11% gain in just one position, for an incredible 32.7% profit combined between the 5 trades. Let Tom O'Brien's years of market experience work for you. If you'd like to see for yourself what kind of trading newsletter Tom O'Brien delivers to his clients each morning, then now is a perfect time to sign up for a 2-week free trial to his daily newsletter, Market Insights. In a volatile market like we currently have, the potential for fast market moves like we've seen recently is a trader's dream. So don't wait any longer. Sign up for your 2-week free trial to Market Insights today at the front page of TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
And as we come back, just a little bit more news. We had one of the White House climate advisors come out this morning and say war on coal is exactly what was needed. And true to the words, we talked about it, probably a year and a half ago, that they were, the administration pretty much had said, in fact, even Obama said that they were going to bankrupt the coal industry. And we're probably getting in the last innings of that. Although we're probably going to see huge amounts of coal use continue in the rest of the world, it is so far cheaper out here. And let me see. I was trying to actually find something. Oh, there it is. But I made yet another speech about the end of coal today. I'm probably adding a little fuel to fire. What was I wanting to look at? That's probably what it is. Let me find all my stuff here. I had Here. Oh, JRCC. That's what we were looking at. JRCC. And take a quick look at that. JRCC. Come on. Hopefully we're not having another senior moment here where oh, there we go. Okay, no, please reset. Anyway, looking at James River Coal, this thing finally coming down, but certainly a penny stock now. We go back and look, 3 years on this thing. You don't want to be on the opposite side of someone that wants you out of business if they are and have the kind of power that a president has. This thing has been bouncing around this 190 range, 170. I would suspect that after hearing what the president had to say today, that we're probably 6 months or a year away from the rest of these coal companies going bankrupt. And probably not a lot of sympathy for those people that live in those coal towns in West Virginia that will all probably be boarding up their homes and leaving to go elsewhere. But it's hard for me to find out or see any kind of out for these coal companies. Again, I think you had 450 coal plant fired electrical generation stations in 2008. We're down to about 150, and the White House wants that to zero. And the question is just how fast they're going to get here. But just take a look at JRCC. I'll look at their financials probably tonight. But it's going to be very hard for me to figure out with the decline in coal how most of these companies can remain a viable concern. What else do we have out here? CTFC approves lawsuit. Of course, a lot of people in the den have opined about John Corzine basically getting a free ride and not being charged by the government, mostly probably because he was the ultimate insider. And a lot of people were unwilling to speak about what he did. Why there was a sort of Damocles over all their heads, and they could find themselves in legal jeopardy. The FTC has gone through most of the books, gone through a lot of what was going on with and talked to the people doing and handling the bankruptcy. But probably most interesting is they've approved a lawsuit that pretty much means that the Justice Department will have to at least go after John Corzine civilly. Of course, if they go after him civilly, he can claim the fifth. But I think most all the laws that he would have broken have already exceeded the statute of limitations. He will not be able to, or they may even decide to give him a blanket amnesty so he cannot claim that and be able to put him on the stand and ask him, when did he know it? When did he do it? And, of course, with the rest of the people, eventually someone's going to break down and probably tell the truth of what happened, all those missing dollars in the last couple of days, and who decided what and who told what lies. But John Corzine, a pariah of the Hamptons now, where he was once the darling of Wall Street. But my guess is that this will probably drag on for 3 or 4 years. But eventually, if this goes forward, we're probably going to find out a lot about what actually did happen out there. But this is the start of it. They're saying that probably the Justice Department will bring the suit in the next 30 to 60 days. We had somebody talking in the den the other day about the tightrope wire walker Saturday night on the Discovery Channel. I brought this up in the den, and just kind of not anything to do with trading other than the fact that I think this is probably one of the best movies I've ever seen as a documentary. It did win an Oscar. And especially with trading in the World Trade Centers, if you want to watch a movie streaming or get the DVD on this one, one of the few actual movies that has gotten 100% on Rotten Tomatoes. If you're not familiar with that, a really good website for figuring out what movies are all about. But it mesmerized me. And if you like, this gentleman walked between the World Trade Centers illegally, I think in 1974. But just a fantastic documentary, and came out in 2008. That those buildings are no longer there. A little bittersweet, but still one of the movies, or at least a doc, that I think is probably head and shoulders about almost everything I've seen. Especially if you liked watching The Gentleman Walk Sunday night on the Discovery Channel, I think you'd love this one. Anyway, going to get to some charts here. I want to thank Oda in the Den for posting what we have here. Is one of our trades that actually worked out very well, at least for him, and that is a Gartley pattern that set up very well on RCII. And it was one of the ones, in fact, this one is actually fairly great in the fact that you had the kind of the ratios that I really look for. A 0.64 from the ABC retracement, which is just about perfect. I don't like them to come all the way back to the A point, and it is always interesting. Oh, we've got a call. Max from Houston. How you doing today, Max?
I'm doing fine. I did sell my home builders yesterday morning,
okay,
which was a beautiful thing. Anyway, but I bought a put on the SDS, which is the inverse of the twice the inverse of the S&P. And I'm curious. It seems to me that the S&P has probably another 10, 15 points to go on the rebound. Is that an accurate?
I think that if you missed the first part of my show, I think that there's a great deal that people are reading into options rollover, and I think you're going to learn a lot more in the next 2 days. I just wouldn't put that much into what you're seeing out here today in this bounce. It is very not uncommon to see the market be pushed down and then pushed up, and this has a lot to do with options rollover. So I always look with a lot of suspicion on Monday and Tuesday, especially quad witching, because not only do you have options on stocks, but you have futures. And it makes it, if you've got to get out of a lot of stuff and get back to a lot of stuff, it's not uncommon to see these things pushed around a lot. So what I'm going to say is that the problem is you just don't know how much of this is real and how much of this is synthetic plays playing out over the next 30, 60, 90 days for options and futures. Because everybody hedges everything today. There was a great book out there called Iceberg Risk that said the risk we see is only about 10% because everybody's hedged everything. And when you hedge everything, basically nothing is hedged. Because you basically, hedges only work good when you have small ones. Everybody pretty much over hedges. And I think we've got, it looks to me like at least what everybody thinks is fair value today is about 1586 on the S&P. I would not be surprised to see it expire right there today.
Okay.
And then I think probably the last hour, maybe the last 30 minutes of today, we're probably going to get a better kind of read of what's going to start tomorrow. But I think I just wouldn't put – I'd put about half of what you normally put into a day on days like this. I just wouldn't read a whole lot much more into them because if you look at the average volatility on the days after expiration on Monday and Tuesday, they are about two – I think it's – last time I looked, there was 2 deviations from the standard. So it's pretty well and easily to document that there's some people out there pushing the market around.
Okay. All right.
So I look in the morning. We've got a lot of Fed talk out here and at least the first Fed president said he's very comfortable with what Bernanke's saying. Maybe we'll get some dissidence in the next couple of days, but I don't see anything in here that says this is any more than a little bounce on the way down. I would love to see some kind of capitulation, even for the first major bounce in these markets. We've come down 100 points, and I haven't seen what I really would consider a major capitulation. Everybody's still talking about buying gold. Everybody's still talking about trading the bounces. And normally you don't get a tradable bounce until no one calls up Tom and starts talking about taking tradable bounces out of this market. Yeah. When everybody's just so disgusted is the first really decent tradable bounce you have. And I just, from watching the CNBCs and stuff like that, I just don't see enough people that are thoroughly disgusted yet to say that we've got at least the first low in the markets out here. But less technical and more gut, and I don't see that kind of hatred and vitriol for the market, all going to hell in a handbasket kind of thing. And normally that's where you get your first bottom in a move, and I think we could still see 38 points lower, 1550, 1525, even 1475 before we get that first huge move back up that is at least sustainable. And, on a light volume in the summer, you can get a blowout in the market and get that nice pull back up in late July and August and even into September. So that's kind of what I'm thinking about now. But I just don't think that we've had enough time going by, and too many people all talking about buying the bounce, and too many people, that held way too long into this, calling up shows like Tom's and saying, "Hey, what do I do now?" And of course, they were all talking about selling into this today, right? Yeah. So So I would just give it a little time, and I think we're going to know a lot more tomorrow. Got a few more Feds people speaking. I think that's going to really put the character on it. But right now, 1585, is a 12-point bounce really going to make you think this thing's going to run back up to 1620? I don't think so, and there's still shoes to drop with China and Russia, and we got riots in Turkey and riots in Brazil. A lot of these BRIC companies look like they've going to have. I've called it the summer of our discontent, but it looks like a rocky summer. Let me put it that way. Yeah, I would like a huge signal, not a kind of muted signal. I think that when we get this bottom, it's going to shout and scream that we've made a at least medium-term bottom. I just haven't seen that yet. Okay? Is he still there? I guess he fell off. Anyway, hopefully we're still on. Someone will say something in my IM here to let us know. But just a little bounce out here. Okay. I guess he dropped off. But, just don't read too much of this into today. A lot of this is The Hangover. It was kind of an interesting first movie. I can't believe the second and third movie actually got made, but who knows. Anyway, we're kind of bouncing up here, 15 points on the S&P, 2.6 billion shares on the consolidated New York Stock Exchange tape, and we'll see how this goes. Anyway, other stocks that we wanted to look at here, he was looking at the SDS. It's just you've got a lot of volume out here. You're going to have a lot of volatility, and I think you don't want to be trading in and out of this chop just too fast, or you got to be extremely fast. 1 or 2 3-hour trades, that kind of stuff. And I tend to try to hold on for longer-term plays out there in the marketplace. We'll be back in just a minute to wrap up the show. Still have plenty of time to give me a call at 877-927-6648.
patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, folks. I'm Steve Rhodes with TFNN.com, and the trend is your friend until it changes. A free special report is now available on the homepage of TFNN.com, and if you have money in the markets, this free report is a must. If your strategy is buy and hold, this report is a must. If you're a day trader, a swing trader, a Forex or options trader, or just getting into the markets, this report is a must. And it's the second best gift you'll ever receive. Look, if you buy a stock and the general market is trending in the other direction, you've reduced your odds of buying at the right time by 70%. Instead, let me teach you how to get that 70% advantage plus. The plus is a free trial to my daily newsletter service, Mastering Probability. There's no upfront deposit, no charge to your credit card, and I compress decades of education into each daily newsletter. This is a limited time offer, so act now, and I'll teach you how to take the trend and turn it into your best friend. All the details are on the homepage of TFNN.com. Act now.
Join Andy Hecht as he teaches you how to make money in commodities. The Commodities Hour, next on TFNN.
And as we come back, S&P's up 15.5 points. Had a question about XRX, which is Xerox. I don't know what they wanted me to talk about other than this thing had a false breakout the last high at 938 on April 11th. with 20 million shares. Tried it with 14. It's back into the trading range. The last little move back from 811 on April 23rd to the high here on June 19th on okay energy, but not all that great. Of course, it did fail with just 75% of the volume of the previous high. Kind of nice. I just don't know what you can do with it. I don't show $10 stocks. In fact, I like $30 stocks. In fact, today is one of the first days that I shorted a stock that was actually under $30. And there's some specific reasons why that they were they're running out of cash. But also they made a fairly decent sized move, and they've got some IPO lockup issues coming out and some stuff like that. But I should know whether I'm right or wrong on those fairly quick. Actually added a couple of shorts in the market, and we'll find out. I'm told by my engineer here that my voice is quite calming. I guess one of these days I'll try to hypnotize the audience, but we'll find out about that. Guess maybe I try to, and maybe I was a lot more boisterous as a trader early on. I try to be somewhat calm in my demeanor, and I met several traders. The ones that I always felt did the best long term had ice water in their blood. They didn't get real emotional one way or the other. The traders that I always saw that were more like Kramer, throwing their keyboards, beating people over the head, acting like total jackasses, pretty much had the same fate as Kramer, and that is that they ran their funds almost to bankruptcy. You can read Kramer's book and find out about that. But these guys that just seem to be over emotional tends to be much problematic. Yeah, leave the theatrics to Kramer. I'm gonna probably, I can see if you're trying to make a television show compelling, interesting, but long before he was ever on television, a colossal jackass to his employees. There's some of his employees that wrote books, and he basically left the market when trading on insider information was no longer a viable plan. And again, you can read his employees' books and what they said about him. Don't believe it all, but there's enough in there to basically color my thoughts on the guy. But, throwing things, yelling and screaming, great for television, probably not great for traders out there. Probably what I liked about when I was racing motorcycles was what good does you can enjoy the excitement, but really do you want to be that kind of guy that gets so excited that he can't control himself when he has to go from 175 mile an hour to maybe 50 and get into a corner? Do you want to be that guy? You want to be the guy that is calm and can see the stitches on the fastball. And I think if you get all wound up on the pitcher mound, or if you get wound up as a trader, probably not a lot that it's going to do for you to get that excited. But it probably doesn't make for a compelling show as we could have. But I throw in little nuggets here and there, like, hey, we'll be here tomorrow. Same bat channel, same bat time, and no disco zone today. Made it through an entire show. Oh, how good does that feel?
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.